All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 29th, 2021. Um, Wednesday night. Let's go ahead and get started. So today continued the yesterday's temporary pausing condition here at the top of what's been a really strong move. Yesterday, we had a small range day. They had a lot of doji qualities. And so we set up a critical state breakout box yesterday, and we didn't really get a break out of that today. It was not much at work. That's good for the long side in one sense, that it did not fail back to the Bollinger Band mean. On the other hand, it was an opportunity to go higher, but it didn't. So this just increases that tension at the end of a move. And so the last time we kind of saw that, and that was even recently, was in this little section back here about 15 days ago, when after a rebound off the bottom, after that rebound move off the bottom, it gave us this kind of sideways channel, followed by a breakdown, a rebound, and then another breakdown. So what I'm looking at here is this just increases the tension of a critical state and makes it more likely to have a bigger breakout the longer it remains in tension. I will still adopt a long side position and orientation if it were to God dang it, if it were to break out above the all-time high at 479. And then if it breaks down tomorrow, I'll be picking up a tactical trading orientation, meaning day trading only, until it were to break below the Bollinger Band mean. And this is where I would really pick up the negative bias. And then if it leaves the river, then I'd be picking up two positions short. If it breaks below the 10-day low at 451, that's when I would pick up a third swing position short. But until it breaks below the Bollinger Band mean here, I will be a tactical trader only. So like within the range of the, down to the bottom of the dragon, essentially, I'll be a day trader only until all that support is eliminated. But I will pick up a swing position on the long side if it breaks above 479, because then that will have it will have left this consolidation zone behind and moved up north. And now we would be looking for the next mathematical resistance level at about 485, which is up there around Z3. So we should be mindful that it's at Z2, that it can move pretty fast from Z2 to Z2, just like it did here. It was like Z1.5 and got all the way down to Z2 in a matter of about 8 days. So this is still a market that is moving sharply when it decides to move in either direction. And but it does have a generally upward bias. We'll see what happens when everybody gets back off of vacation, unrested because of all the COVID shenanigans. But I'm expecting an increase in volatility when the market reopens and everybody's back at work. All right, let's take a look at the sectors today. Not that much to report on. So we'll start with our 6 primary indexes. The S&P was basically flat today at 0.13. The Dow was the strongest at 0.23. The Russell was slightly underperforming at 0.11. The Qs are basically flat. Emerging markets were off a half, and treasuries were down 1% to close at 146 2/3. So it's still above the key price level of 145, but that's actually a vote towards the upside when treasuries are not able to hold their pricing. That's a sign of money that's rotating over into equities. So I take today as slightly positive, all things considered. Okay, let's take a look at the sectors that were better today. So XLY, the staple or the consumer discretionary, were slightly better. Materials slightly better at 0.4. Then we have wheat and precious metals, 0.45. Consumer staples, 0.46. Blended commodities, commercial real estate, 0.6. Oil, lumber, agriculture, marijuana, and lumber. Again, the second lumber up at 1.65. It's been a while since that has been the best performing sector for sure. That's, I think, in response to some more inflationary pressure, both in oil, materials, and lumber. The outperforming targets, Alcoa and TX, the steel company, at 0.7, Microsoft at 0.21, and that's pretty much it. So this was more about a day of, I think, profits being taken off the table in a lot of the individual companies that have been outperforming. So let's take a look at underperforming sectors next. S&P Tech was slightly lower, lithium slightly lower, finance minus 0.13, Mexico oil exploration and biotechs off 0.42, energy 0.6, FANGs 0.8, Bitcoin trust or Bitcoin futures, I should say, minus 1.16. The ARCs, genomics and innovations 1.5 and 1.9. Brazil down 1.9, Robinhood 1.95, clean energy 2%, VIX 2.6, the Bitcoin Trust 2.6, Moonshots 2.8. So quite a few of the the speculatives getting smashed today. Ethereum large cap blended crypto minus 4.6. And then blockchain minus 14%, reflecting a face shot to all the companies that are leveraged to the cryptos. Individual companies that underperformed: Virgin Galactic off 5.6, Coinbase, John Deere, Squarespace 1.11, Devon Energy, Cliff, and U.S. Steel. So a mixed bag on the metals. You had Alcoa and Tex outperforming, but U.S. Steel and Cliff underperforming. So I think this is really not a day that we want to put too much directional sense making into. I think it's its own little trading day with retail traders and tactical trading. Not much of a strong move in either direction when we look at this thing on the big chart. So this was a market that was simply idling. I actually take that as a positive sign to the upside, because there was no interest in smashing the price lower. So that, in the absence of selling pressure, markets tend to rise in a grinding way, and I think that's what we saw today. Only one chart of for work here. This is from Moyek, working in energies, which energy never sleeps. It never sleeps. And this is some really good work. Let me get all right, so all right, so he's noticing the Z3 pinch here. He buys the Z3 breakout. It doesn't really follow through beyond the VWAP, and it just kind of starts rolling over. So he decides, hey, let me just get paid to start the day, which is nice. He's able to kind of avoid the chop, which doesn't really get much wider than the original Z3 box anyway. But then he notices higher lows. He missed those entries. This is a Kata 2. This move followed by a reversal up. That is a Kata 2. He does take this one after this little consolidation, and it's well above that cluster of prices in here. It's like 1, 2, almost 3 full expansion boxes, if we can call it that. He goes ahead and takes this one with a nice tight stop at the bottom of the dragon, gets paid. I'd like to see, after you've already seen the first leg and you're in the second leg, I'd like to see you get a 1, 2, 3 entry in about here, but still that's a pretty good sniper, and locks in 1.3. That gave back more than an R, I think. So I would, even if you just use a money management stop on that one, I think you get paid a little better, but that was still pretty good. What I really like about this one, though, is the owl entry that we're about to see. So he sees this spike, comes down, and it hits his selling point. It doesn't really break through the top of the dragon, and in fact, the dragon rolls over, and the RL10 has rolled over, and even the RL30 has rolled over, and the PSAR has flipped, and that makes this one an owl entry to the short side. And it comes down, hesitates, then breaks out of the river in the Z2. And he said, yep, that could have been a second entry. We would call that one a collapsing dragon. I would take, the bottom of the RL10 is there. And so I would probably call that one a collapsing dragon. And really, this next big move down, that's what we mean by the collapse. See how fast that gets paid? And that's really this support level in here failing to hold. And so that when that thing drops, it drops like a stone. And that's why we love the collapsing dragon so much. Then that continues to fall through the RL 270, which was an opportunity for another entry short. You get a slight consolidation here, then a breakdown through the VWAP, which he notices that could have been a second or a third entry. I especially like the collapsing of the VWAP, because now when the VWAP collapses, that is sort of negating all that big price move up. So then what you say is, well, if this thing was able to stretch this far from the VWAP, that's how far the traders were able to move it. So let me show that again. So this stretch, from whether you're measuring from the VWAP or the RL270, you say that's how far the traders were able to move the RL10 away from what we would call fair value. So how far to the south could that be? Well, you take that same length and now you measure it to the downside and you say, this thing had every reason to be able to get down this far. So when you get short here, you're really looking at kind of leg one into this cluster and then leg two down to here. And what that makes these still well within the money. There's still plenty of targeted price to the bottom to aim for. And by this time, you're able to get to no lose plus dinner for two off the first entry. So then that second entry is in the money. By the time you either get through the 270 or the VWAP, both of those positions are well in the money. So you are managing your risk as you go down. Now notice when the VWAP breaks, notice how sharp that sell-off collapse is until somebody comes in and starts buying it. So that's the move. And you want to be prepared for that. You want to not be surprised when that happens. That is the least surprising price move on collapsing dragons. It happens decisively. And on those moments when it doesn't fail further, the fact that there was not another decisive sell-off means that, oh, this could actually be the rebound. So what he's able to do is he still gets this short and covers here, which is really good execution on one position for 5.5 R. That's pretty good day at work. He gets the stop and reverse. It doesn't work. He covers here. Now, this is where I am always tempted to go short again, because I still think this thing can get, if we go back to this analogy, that's where the price target to the downside is. And now if I'm short here, I have a reasonable move to get down to here. Now, it didn't get there, but you would not have lost money on this trade. And then when it failed to fail further, now you get the Kata 2 reversal to the upside with the PSAR flip, and now you get that little move. So this was really good work today at 7.2, but this could have been 15 if we'd have gotten the earlier entries in here. Then this whole move would have been about 7 instead of 1.3. And then if we'd have gotten these extra positions, heck, this could have been 20. But what I'm pleased to see is that you're getting the timing right on that turning point. You're getting a good exit, and you're able to get, you were able to aim for this one. But I want you to be able to take this trade, and I want you to see why you really prefer the downside and collapsing dragons. After these kind of spiky moves, the least surprising move is the one that gets back to the Bollinger Band mean. So I think we should have at least gotten this second position in, either here or when it breaks through the RL 270, you still have a reasonable move to the downside. Okay, so that's really good work. I want to pull up Luke's move here real quick. Now, we were kicking ourselves in the butt because, we waited a whole year for Luke to cut his teeth there on the, working on Cliff. And as we, at the end of November, when we did the live trading and research weekend workshop, and Luke made his presentation, when we started considering, what other symbols might he look at? And so we said, well, let's try the Aussie dollar, US dollar pair. And we started on 15 minutes, and he quickly kind of shifted to the 5 minutes. And here's why that's a good idea. I want you to notice the thick black line in here, and these very clear turning points. Look how orderly this little sine wave, this is almost like those big ocean waves that he's used to down under, right? That's a very orderly oscillation. And now I want you to notice how he's getting short on the RLXD. He rides it down here to the Z3 pinch. He does a reasonable job of getting this exit. I'd like to see you getting this one, but I like this taking out the PSAR dot. There just wasn't much there, so that's a good exit. He takes the crossover of the dragon. So now when you see that RL10 or the price crossing to each side of the dragon, he's doing a good job of detecting that. And on the 5 minute chart that he's on, there's enough time to really prepare and plan for that. So now he gets long here and covers here. This might have been too slow getting out. He's got to remember that on the 5 minute chart, and when you got money in hand, especially when the support level or the resistance level was right here anyway, this peaking right here and rolling over is the least surprising behavior. So I'd like to see you get the exit. I'd like to see you get the exit in here after this peak. They got beyond Z2 and then just rolled over. This was failure to break out and go higher. It got suppressed by this price level right in here. It could not get through that boundary. So I'd like to see you catch that exit here. And now this is still a good, that's not a bad exit. I mean, you make 1.3. But now you could have gotten short here And then you might have been able to scratch this instead of getting short here and then having to cover here for a minus 0.6. You might have been able to get short here and scratch here. So there's a half an hour, half an hour improvement inside there. All right. Now the next one, he looks to get short here because you have a high, you have a lower high, and there's the RLXD and the PSAR flip. So that's a properly constructed short and a great stop. And now with this choppiness, he waits and then he gets the next RLXD to the downside, decides to put a second position in quick when it breaks below the Z3 line. That is great. And then notice on these collapses how quickly that gets in the money. Now, what we could do is if we really wanted to squeeze this, you would see that as the bottom as a 1, a 2, and that makes the 1, 2, 3 exit right here instead of here. And that's a micro improvement. Still, that's 4.1, and we could live with that. Now he waits for the turning of the RL10, the rollover of the dragon. He waits for the RL10 to cross the dragon and crushes this one. Now I'm going to chew him out for after an excursion almost to Z3 and this failure here and let it come all the way back to here. At the worst moment, this thing gave back that much, and you gave back more than half of that gain. So I'd like to see you on a gift like this, take that exit instead of waiting for this one over here. Now this one rolls over and he takes his sniper exit here and then gets short properly. And once again, I want you to notice on the collapsing of prices, how violent and fast that occurs. Whereas these little moves to the upside, these are all kind of grinding. These collapses are big and fast and in a hurry. So if anything you want to take away from this is that collapsing dragons fail quick, fast, and in a hurry. He does a nice job of, he gave it 4 or 5 bars. It didn't fail any further. So now he's able to try this one. It doesn't work. So he scratches out on that one. And he brings home 12.5 R. This one probably should have been 15. And so a move from 12 to 15 is a 25% improvement. So there's still some room to work on his technique. And I think some of this you got to remember is that it's on the 5-minute chart. And we want to maybe execute a little quicker, a little tighter at the turns, but really good work. And keep maintaining that all the way through. All right. I want to shift now to the daily reports. All right. So we are still in bullish normal. Oversold on all the dimensions except the 2-day, which is stalling a little bit at 54. Yellow bullish. The risk Z is still pointing the way to the upside. There's still another little leg up that's available that would take this to 485. You could see a move to 485 that would drive the VIX, the risk index, a little higher. Euro Asia blend and Asia less Japan are still the targets for short side triggers if the market were to collapse. Diamonds, Coke, 3M, United Health, and Walgreens in the min pains. These are the unsexy staples. almost everything on a doji today. So I wouldn't be trying to pick a direction for tomorrow when everything's all dojied out like that. Then you got to be ready for a breakout from a critical state. And it's a 1-day trade only. It's an intraday get paid tomorrow. Goldman Sachs is postured nicely. Pfizer, Travelers, on the basis of their the auto framers. In the ETFs, a ton of dojis. You have Japan, which is notoriously hard to trade, but also treasuries test out well on the auto framer. I think at some point, clean energy is going to just really wake up and smell the coffee. I think it got harmed quite a bit by this failure to throw more tax dollars at the infrastructure bill. Those are a bunch of companies that aren't making money, but which would have benefited from the infusion of trillions of dollars into the clean energy sector. When that failed to materialize, you're seeing all those things getting smashed. Brazil continues to underperform. That's on my short list for sure, for a nice rebound. There's your mechanical entry data for the auto framers. Here's your framing data. And just about everything getting squeezed. Not a surprise when you've had 2 really tight range days in a row. And the S&P is, again, poised for a sharp breakout, as is now the Russell and the mid caps and the diamonds and the tech sector. When you see that, that's the whole market is compressing like a giant explosive spring. Don't know which way it's going to go. When that break happens, it'll be a sharp move, and you need to be ready to play in either direction. Get paid on the intraday. All right, that's everything I want to cover for today. And there's our little compressed dojis ready for a big sell-off or a great big move to the upside. Be ready for either one of those. All right, that's everything I got for us. We'll get this published and posted, and be prepared for tomorrow. And we shall see you tomorrow.
Good night, brother man.